Hello and welcome to traders and investors, and I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. Let's draw pivot points for majors: EURUSD and pound sterling dollar pair. Evangelos Poulakis would help us.
As May is about to come to an end, the market is currently dominated by uncertainty, with boundaries defined by clusters of levels from various time intervals: 1.0859, 1.0871, and 1.0885, and also 1.0817, 1.0808, 1.0796, 0792. If EURUSD shows significant activity today and someone decides to make a move at the end of the month, more distant levels could come into play, such as the final level of the weekly Ichimoku death cross, 1.0934, or the lower boundary of the daily cloud, 1.0722. On the lower timeframes, the pair continues to trade below the key levels, which are located at 1.0822, the central pivot level of the day, and 1.0843, the weekly long-term trend. Currently, these levels have become almost horizontal, which shows that there is no specific direction. The pairs can maintain the upper hand of the pair traders below the key levels. The intraday bearish targets are the classic pivot levels at 1.0797, 1.0764, and 1.0739. A breakout and keeping the price above the trend will shift the current balance of power in favor of bulls. The bullish targets will be resistances of the classic pivot levels at 1.0855, 1.0880, and 1.0913. On GBPUSD, the daily short-term trend, 1.2738, currently acts as a center. Today, both the weekly and monthly results are in focus, though on the monthly scale. The situation is progressing within a consolidation zone and is unlikely for the price to move beyond its bounds during the month of May. Nonetheless, the general mood and direction could support the activity in April. The nearest bullish target is the resistance of the lower boundary of the monthly cloud, 1.2892. Bearish targets are represented by supports on the daily and weekly timeframes, with the nearest level being at 1.2665, weekly and monthly Fibo Kinjun levels. Uncertainty dominates on the lower timeframes. The weekly long-term trend holds a horizontal position, 1.2739. We can take note of some advantages based on the price's position relative to the trend. The bears currently have the advantage. As the pair is trading below the trend. Intraday bearish targets are the supports of the classic pivot levels, 1.2690, 2652, and 2624. Consolidation above the trend will shift focus to the resistances of the classic pivot levels, 1.2756, 1.2784, and 1.2822.
Let's trade with the MACD indicator. It's time for USDJPY currency pair. Jakub Novak presents.
The USDJPY pair sharply fluctuated around the 61% corrective level over the past 2 days. The price has returned below the corrective level and is trying to consolidate below it, 157.00, which means that it needs to close the day under the line. The fluctuations on Wednesday and Thursday were technically necessary to rise the signal line of the Marlin oscillator to the upper boundary of the wedge and then directed downwards for a subsequent exit from the wedge. It could exit the wedge today. The yen's target is the support level at 155.75, which is reinforced by the MACD line. Consolidating below this mark will be a sign of further decline, and the medium term to strong levels like 150.90 and 146.50.
On the 4-hour chart, the price is testing 61% Fibonacci level from below, supported by the MACD line, 156.73. It appears that the Fibonacci level has already proven its strength, as the bears tried to stop the price from breaking above this mark on Wednesday. Consolidating below the MACD indicator line, 156.73, opens the nearest target at 156.04. Just below which lies the target level and the second target of 155.75. The Marlin oscillator has already settled in the bearish territory and is pulling the price down with it. That's all for today. Wish you best of luck.